Good day, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Friday. It is the last day of the first trading week of 2022. It's Friday, January 7th. It's about 7:53. The market's going to open up in about an hour and 37-ish minutes to be exact. As you can see here, the Dow is just down about 3 points. The NASDAQ is up, actually stronger than the Dow. And the S&P will meet us right in the middle. Very, 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 very random trading action. The big focus today is going to be on the employment report. Now, if the employment report is weak, right? If the numbers are weak, then the Fed may have a second thought about pushing interest rates higher. If the report is really, really strong, then they're going to double down and say we're going to move interest rates higher faster than we originally thought. So keep your eye on these numbers. The consensus is 400,000. If we come in below 400,000, it may be good for the stock market, or especially the tech stocks, because it'll relieve some pressure from them. If the number is really, really strong, then it would cause the Fed to double down or say, we told you so, the economy's getting too hot, we got to take action. So this report is going to be very, very strong. Now, just to give you some insight, we had the ADP report on Wednesday, which is a private report that reflects on today's report. That's this report right here. And we were expecting 414,000. We got 807,000. So the number was just crazy good. Now, it doesn't always happen that the report follows, that the public report follows the private report. But if the ADP report is right, it's not going to be very good for the market. And this is actually one of the major catalysts that caused the market to go down, the strength of this ADP report, because it gave us a good indication that the Fed is going to say, we told you so, we told you economy's running too hot. So this report today is going to be very instrumental in telling us or confirming whether that's the case or not. I think the numbers are going to be pretty solid, but again, with all the COVID, with people traveling, with the holidays, it's going to be very, very interesting to see how it goes. This is for December. Expectations is 400,000, and unemployment rate is expected to be at 4.1%. That's the target. 4. The 4 is the magic number here. Now, let me talk a little bit about global economy, and I'll move on from there. This is now the entire world, and this is what happened last night. This is what the S&P is keying off of right now. Big decline in big tech stocks. Apple was a big, Apple has big market cap and it went down yesterday. Resurgence of COVID outbreaks added to uncertainties over a revival of tourism and other business activity in many parts of the world, including Asia. So far, U.S. is being treated like it's past COVID, as far as I could tell. As far as the sentiment, nobody's really caring too much about this O variant because people aren't dying. World Health Organization says a record 9.5 million COVID cases were tallied over the last week as the big O variant of the COVID swept the planet. 71% increase from the previous 7 days. Oh boy, tsunami. I think that's a good way to put it. Japan approved new restrictions on Friday to curb a sharp rise in COVID cases in 3 most affected regions. Weakness in big tech companies like Apple was the main culprit for the downside yesterday in the tech and overnight in the global market. The selling followed a broad slide from the market on Wednesday where the Federal Reserve indicated it was ready to raise rates to fight off inflation in their minutes. But again, if the Fed data now suggests the economy is weaker, they may push back the timeline because of this COVID. So it's all it's kind of like bad news is good news for tech and good news is bad news for tech. Labor Department reported the numbers of Americans applying for unemployment benefits rose last week, but remained at historic lows. The number's been like around 200,000, so it's really low. Much attention will be focused on the Labor Department's monthly job reports due in about 33 minutes. A strong job report could add urgency to the Federal Reserve's effort to tackle inflation by raising interest rates, which is how I started this report for you. I explained that. A strong job report could add urgency, where a weak report could say, the Fed may, because of this COVID, they may do a double take and let things go for a little longer, and that would be really good for tech. Oil is going crazy right now. It's looking really, really great. As far as the bond market, it's really flat. In my opinion, and here it is, I'm going to tell you my 5 cents. If you're a brave man, and if you want to go against the main trend, and the main trend is lower because interest rates are going higher, so the trend is lower. But if you're a brave man, buying bonds around these levels and holding them till about the 150 level wouldn't be the worst idea in the world. I like to trade only in the direction of the main trend, so I will sell bonds around the 150 level, and I'd like to buy them back around here. But quite honestly, I really like the bonds around this level. And if I traded against the trend, I would be buying bonds right now. Just between you and I, let's just leave it there. Put to call ratio, again, we were at 105, now we're at 97. It's still telling me that the market is coming off of the big sell-off that we had on Wednesday. We may have another up day unless the Fed numbers are just through the roof. We'll see. We'll know in about 32 minutes. Volatility is not really picking up, which is another indication that markets are looking bullish. The put-to-call ratio, as I said, usually where it's near 1, it cools off and markets go higher. We will see if that's the case. S&P is in a very, very peculiar place right now because we are hitting the 50-day moving average, and I wonder if we're going to go above or below this level. I think we've bottomed out, but we won't really know till the day gets started, until we see the jobs report. But markets are getting a bit defensive. Now, if you look at the Dow Jones, it's in a very interesting position, very precarious position. It made an all-time high 2 days ago, and then it went down, but we're still above the 50-day moving average, and the Dow's looking really good right here. So I think we may stick around the 50-day or stay above the 50-day moving average. The biggest question mark and the biggest wet blanket on the market is the NASDAQ 100, which is now trading below the 50-day moving average, but the RSI looks pretty low around these levels. And if you look at the 2-day RSI, which I sometimes look at for buying opportunities, you will see that the RSI is grossly overdone, which tells me that the market is more likely than not going to go up from these support levels and go back and begin a choppy period. There's really no reason for the market to go bearish right now. Usually in a regular market, unless it's a panic, it'll go from a strong accumulation to choppiness. So we may get some choppiness, but if we take out the high level, if we take out this level, all bets are off. Looking at the Russell right now, you will see that the Russell is still not doing so well. But again, I have really big hopes for the Russell. I like this uptrend. I think it's going to come up. There's less interest rate fluctuations, and when Russells rally, they really rally. Looking at the sector, the 5-day sector map, look at this: oil, energies, banks, defensive. I don't know about this movie and TV production distribution. That could be because of the COVID, stay at home. Movie, TV distribution centers sometimes do well. I'm not sure what that's all about. Banks, again, indices, financials and oil, banks, oil, consumer staples. I mean, you can go on, but you get the point. That's 5 days. Yesterday, if we look at it yesterday, again, oil, energies, banks, top sector, top 100 stocks. Don't know what that's all about. Again, TV movie distributions and banks and oil, financials, power, utilities, oil. The bottom line is oil has been doing really, really well, and consumer discretionary. I don't know what transports have to do with it, but consumer discretionary, steel, mining, basic materials has not been doing well. So that's kind of where we stand right now. Looking at the sectors, at the cumulative now, energy, consumer staples, there is a big problem still. The market is fragmented. There's no way in hell you'd see consumer staples and consumer discretionary next to each other. These have to move apart. One of these is going to win. Either we're going to get a reprieve from the Fed and consumer discretionary is going to rally, or the Fed is going to double down and say, hey, the job market is going crazy. It's time to raise those rates, and consumer discretionary will go down. If you want a sneak peek at what's going on, look at it on a monthly basis. Defensive. Look where the most 3 speculative sectors are this month, all the way at the bottom. Are they going to come back up again? I'm not so sure. Right now, energy, consumer staples, financial, basic material, industrial, utilities. Defensive is at play. Now, what happened this week? We took a nice little short. We shorted this IBB. I told you guys that biotech is going to go down, and it went down. We sold this on the 29th of December. Let's see here. Right here. We sold it right there. Market made a new low. We made a 10-day high. We sold it right here on the, 29th, actually right here. We sold it right here. Went against us, and then we took profit right here. And we took a profit of about 20.8%. If I held it all the way here, oh boy, it would have probably been about over 100%. But again, I'm not interested in catching the entire move. I didn't know the volatility was going to be this crazy and whether the asset was going to go our way or not. So I took a nice 20.8% trade. We were in it 1 day, 2 days, 3 days, 4 days, and 5 days. Nice, easy, and simple. Now, before I go on, this is what you guys need to pay attention to. Pay attention to the jobless claims, pay attention to the bond market today, and pay attention to the SPY. Pay attention to the SPY and keep your eye on whether or not the SPY is going to violate the 50-day moving average and go down and break down, or if the worst part of this is over and we're going to rally up. The 50-day is going to be a big telltale sign, and we're going to get a nice big clue in about 24 minutes before the market opens. Now, I want to tell you guys something. Do you guys remember my recent Turning Point 2022 presentation? Well, today, it was where I gave you no fluff, all meat and potatoes. I gave you levels. I talked about it at length. Today, I've had so much demand for a replay. I'm going to go live at 10:30 in the morning Eastern to close out one of the trades that we opened. Hopefully, we'll see how it goes and discuss the strategy behind it. Even better, I'll give you a new free trade. This is the last chance to get on a Turning Point 2022 and hear my biggest market predictions of the year. I'll give you a couple of setups today as well. So if you're watching later in the day, don't worry. I'll include a replay link. I got you guys covered. Click the link to access this training now. It is below this video. I know it is because I posted it inside YouTube myself. So don't miss out. Turning Point 10:30 Eastern time today. I'm going to give you guys all the hot tips. The replay link will be provided. It's going to be a good way to end the first week of the year. And I'll give you some new updates about the markets and what I'm seeing right now as well. Don't miss out. A lot of people have been asking me for this. It's not a waste of time. Even if you've seen it before, it's all meat and potatoes. I'll answer your questions. It's happening at 10:30 Eastern time. Don't miss out. And again, replay link will provide it. And I'm going to give you guys a couple of cool 90-10 setups to send you home for next week with the right setups. So I'll give you a couple of either 4x4s or 90-10s with it as well. Follow the link below. Don't miss out. If you're watching this after 10:30, check out the replay. It'll be posted right afterwards. And as always, make sure to like this video, subscribe to this channel if you're watching on YouTube, stay ahead of the market, be the first to be notified when I post my next video. And the link is provided. Don't miss out. Have a great weekend. And next week, we got rollovers. We got a lot of stuff going on. I'll talk to you guys later. Have a great day. Bye.